You've listened to us talk about that tension, the political tension, the economic tension over the pandemic between the United States, Europe and China. How do you frame that debate for your clients from the economic perspective at the moment, Chetan?
Well, I think, Jonathan, this is definitely an important issue, and I think it will stay with us for some time. But at this point of time, we think this is more of a risk to monitor rather than something that breaks the fundamental economic story. And so we are more focused on what are the policy reactions which every government and central bank is taking up. And I think that is a more important driver right now for the economy than these rhetorics, which I think will have to be seen to be translating into actual actions to really break the fundamental story.
So let's talk about the economic story. A lot of people looking to China as they slowly reopen as maybe a base case, a test case for how things evolve in the United States and Europe. In terms of the visibility you have on the economy as they reopen, Chetan, what are you seeing at the moment?
So, look, I think we looked at two things. One is how many states the U.S. is reopening, what is the raw size of GDP, and then the second thing is, see how things evolved in China and see how that informs us. So on the number of states that have evolved, started to openly in the U.S., it's about, if you take the matrix that the White House laid out on the phases, and we think second phase is really the one which is more meaningful, and by mid-May, we think about 54% of GDP of the U.S., the states which account for 54% of GDP, will be able to reopen in a meaningful manner. So that is an important data point that we are tracking. The second, on China's front, in terms of the sectors that began to recover, it was the manufacturing sector and construction sector that recovered first. In fact, construction sector is seeing a year-on-year growth, like if you think of the segments like steel, cement, but it's a consumer sector that takes longer, and that is a bigger sector in the U.S. and also in Europe. And so those segments will probably take much longer. On China's case, right now, mall shopping revenues are still down about 30% year on year, and it's 2.5 months since the new cases peaked. And we think that the U.S. get to something like 30 to 45% year-on-year decline in May, July. Currently, we think it's declining 78 to 85%. So we're watching really the consumer sector behavior in China, and we think it will be a bit lower on the consumer sector than the manufacturing sector.
Well, Chetan, this is absolutely key because the sequencing of reopening in places like Italy at the moment seem to focus on construction and manufacturing first, and then weeks, maybe even months later, you start to reopen the consumer-facing parts of the economy. If we're going to reopen the bigger chunk, the bigger slice of GDP much later, and we have experience now where we can acknowledge it also takes a whole lot longer for those sectors to recover, how does that shape your view on the trajectory of the recovery coming out the other side of this?
So, Jonathan, we are looking at this by comparing the level of output that we were in before COVID-19 and when do we go back to that. So in DMs, we are expecting that to happen in about by December 2021 quarter, so call it 8 quarters. This will still be better than what we did during GFC when it took us 14 quarters to get to the same level of output we were before the crisis.